Hi, today we're taking a deep dive into Price Channel Breakout. These are breakout examples that were automatically generated by the algorithm, and I'm going to show you the code in a while. And you can download the full Python code for free from the link in the description below. So this star is a breakdown. We have a downtrend afterwards. Then we can check this one. Another example, we have a break up, a star below the candle, which signals a future uptrend. And we're going to explain all the details in a while. Simply put, this is a technical analysis tool that helps traders identify potential breakouts in price by plotting a channel around the price action. This channel represents the high and the low points of the price over a set period of time, and when the price breaks out of the channel, can signal a potential trend change or market opportunity. The interesting part is that in Python, we can automate the process of identifying channels and potential breakouts when they happen. And as I have mentioned, you can download the full Python code I'm using for this video from the link in the description. I will also join the CSV data file in case it's needed. On this chart, the black stars represent the breakouts detected by the algorithm. The last two stars here are the breakout from this channel, shown with these two line segments. So when the star is below the candle, it signals a break up, so a future uptrend. And when the star is above the candle, it signals a future downtrend. It means we had a break below the current channel. So this first star, for example, is signaling a future downtrend because we have a break down below certain channel. So we're not talking about this particular channel that is shown here. It's a different channel coming from previous candles. This one as well is showing a breakdown below a certain channel, and this one as well. And these two are related to these line segments that I'm showing you here. So we can check another example. For example, this star is related to this channel detected by the algorithm. And when we have a break below the channel, notice here we had a small retracement. And this is why we have the star above the candle. It's signaling a future downtrend. And in this case, it's working. Notice this one is working as well. So this forecast is also almost correct. I mean, we could still make a decent profit. This is the daily time frame for Euro US dollar prices. These two stars we've already mentioned. These are a break above a certain channel, precisely this one. So we're breaking, the candles are breaking above these two lines, signaling also an uptrend. So as we can see on these examples, using the daily time frame and the Euro US dollar price, the signals seem to be working well. So we need to test further, and I'm going to walk you through the whole algorithm steps and the code, so you might be able to modify it and fine-tune it according to your trading, your likings, and the asset you will be using it on. The algorithm works using 3 detection points. The first one is to detect the pivot points, meaning the candles that are showing very high values versus the neighboring candles. Then we detect the channels, and the third phase is to detect the breakout of the channel. So imagine we are going to test if we have a breakout, for example, at this particular candle. Let's take, I don't know, maybe this one. And the first thing, the algorithm is going to look back to a certain number of back candles. And this is something that we can define as users in the code. So we have our back candles. We can change this parameter. It can be 30 or 40 candles, depending on the time frame you're using. The second thing, we're going to check the pivot points. Pivot points are simply candles where the high is higher than the other highs of the neighboring points. So we can take two candles of each side, and we have pivot lows when the lower point of the candle is lower than the other lows of the neighboring candles. We're taking 2 on each side. So here we have a high pivot. Here we have a low pivot. This is a low pivot as well. High pivot here, low here somewhere. This is a high one. And probably this one as well. So these points, then we're going to use them to make a fit. We're going to fit a line. And then we fit another line for the highs. And that will be our channel. So this is the second part, which is the channel detection. So first of all, we check the pivot points. Second one, we detect our channel. And then for the breakout, there are different ways of doing it. The one I've used for this video, for the breakout in the up direction, this is the current candle I'm trying to test. So I want that the low is still within the channel, but the opening and closing prices are outside of the channel. That's the previous candle. And the current candle I'm testing should have the open and the closing price outside of the channel. In the opposite direction, breaking out below the channel, we have to have the first condition of the previous candle is to have upper wick within the channel. So that's our channel here. And the closing price should be below the channel, outside of the channel. And the current candle, the one I'm trying to test, should have the opening and the closing prices both outside of the channel on the same side. In this case, breaking out below the channel. So this is the part where you might want to modify things. It can be done in many different ways, depending on the conditions you want to look for, depending on the patterns and the asset you are trying to trade. But I think it's a good start, and the signals we've seen previously were good enough. So now let's check how to write this in Python. So this is our Jupyter notebook file. We're importing pandas, numpy, and plotly, because we're going to need these to plot our candlesticks later on, and the SciPy stats module that we will be using to fit our pivot points to detect our channels. First, we are importing our CSV file. So it's a Euro-US candlestick daily, the bid prices from 2003 up to 2023. So we have 20 years worth of data. And the first function we're defining is to detect if a candle is a pivot point or fractal. It takes two arguments. Candle is the current candles index to be tested if it's a pivot point, and the window is the number of candles to be considered on the left and the right of the current candle, just to check if the high is higher than the other candles and the low of the current candle is below the other candles. So in other words, the window argument is the number of candles, neighboring candles from the left and right of the current candle to be considered in our pivot testing. So the first part of this function is an edge case. If candle minus window is below 0, so we are at the beginning of our data frame, or we are at the end of the data frame, so we are exceeding the data frame size, we're returning 0. It's not a pivot candle. Otherwise, we consider two variables. Pivot high is equal to 1, pivot low is equal to 2. So the current candle is both pivot high and pivot low, unless we find that the current candle's low is above any of the neighbor's candles low. So we cancel its label as a pivot low, which will be equal to 0. And in the opposite case, if the high of the current candle is below any of the highs of the neighboring candles, we also cancel its pivot high label, which will be equal to 0. Now, it might happen that a candle is a high and a low pivot at the same time, because if the highest point of the current candle is above all the highs of its neighbors, and the lowest point of the current candle is also below all the neighbors' lowest values, in this case, it will keep both pivot high and pivot low variables, 1 and 2. And in this case, we are labeling it as 3, so the function will return 3. Else, if it's a pivot high, we're returning the pivot high value, so it's returning 1 in this case. And if it's a pivot low, we're returning 2. Otherwise, all the default values return 0. So that's a pretty nice function. It takes the candle, and now we can candle and the window, and now we can apply it to our data frame candles. So the new column df is pivot in our data frame is equal to, I'm going to use the apply function using is pivot on all the indexes x.name or all the candles of the data frame, using the window parameter, which is equal to 3 here, and the axis is equal to 1, so the apply function is going to iterate on the rows of the data frame. Now we can plot this on a graph, but before plotting these points, we define a new function called point position. It takes a data frame x in argument. We're going to look for the is pivot column. It's equal to 2, which means we have a pivot low value, so we're going to return a position for our points below the lowest point of the current candle, minus 10 to minus 3 in this case, because we're talking about the euro-US dollar, so this seems to be a good empirical value, I would say. In the opposite direction, when we have label 1 for the pivot, so it's a pivot high, and the future candles are going down, we're going to return a position that is slightly above of the highest point of the current candle. Otherwise, we return the numpy, not a number value. And we apply this function to our current data frame on all the rows, and we store the return values in the point position new column in the data frame df. We're going to use these positions just for plotting, and that's what we're going to get. So these are the purple points that you are seeing here, the fractals. Also, some people name these fractals. For a better visualization, we can increase the size. Let's say instead of 5, I'm putting 10, and now we can see these clearer. So these are the points we are seeing here. And we can see that the function is working properly. We are detecting the pivot points correctly, and we are placing these purple points on our candlestick chart to see these visually. The way we can plot these is by using the go figure candlestick parameter inside. We pass the open, high, low, and close prices, and then we add on top of the figure our point positions in any color you'd like and the size you'd like, and then we provide these a name for the legend. In this example, I only took a slice of our data frame. It's from 0 to 100. We can try, for example, from 100 up to 200, and that would provide a different part of our candles. So we can see that it's working more or less fine the way we've done it. We can increase the window. For example, I'm taking 3 candles on the right and 3 candles on the left of the current candle to test. So we can, if you want to be more selective, you can add this windowing number up to 4 or 5. But for the sake of this video, we're going to leave it this way and carry on. So now we need to detect the price channels. And for this, I'm defining a new function called collect channel. It takes a candle index, a number of back candles, and the window parameter again. And we define a local data frame, which is a slice of our big data frame. We're going to test from the current candle we are interested in back to candle minus back candles minus window up to the current candle minus window. And this part is very important here. I might also need your help to check if we have a look ahead bias. In this case, it's very important that if we are testing the current candle index, we don't look ahead of the current candle, because if we're going to use this in real trading, we don't know the future. And this is why I'm limiting my local data frame up to candle minus window. And remember that this candle minus window, is also excluded in Python from the local data frame, because the right edge of the slice is always excluded in the slicing of data frames. So in this case, for example, if I'm testing this candle, which is which index is 160, I'm taking a window equal to 3, so 160. The last candle we're going to look for is 156, because 157 is an edge case that is excluded by the slicing in Python. So I think we are safe from the look ahead bias. Just you might need to let me know in the comments what you think about this part. It's good to have more people looking at it and verifying that we're doing things the correct way. Then we can create a new column in our local data frame. It's called isPivot. We apply the isPivot function again. In this case, it might not have been needed because this column is already in the data frame, in the larger data frame, but we're thinking about the future if we're going to use such a function for real trading. So we might want to simply call it, and it will be every time collecting data from the market and calculating the pivot points for these candles. Then we isolate the high values and the indexes of high values, the low values of the pivots, and the indexes of the low pivots. And in case we have more than 2 low pivot points and at the same time more than 2 high pivot points, we are going to fit a channel. So we need at least 2 points, 2 high points and 2 low points to define a channel. You might want to change these to 3x3 or 4x4, depending on how selective you want to be and the time frame you are trading. Then we will use the linear regression to fit a segment or a line on the lows and on the high pivot points. And this is going to return the slope of the lows, the slope of the highs, and the intercept of both these segments. The R value might be used later on. If you want to make your algorithm more selective, you might want to add a condition that if a channel has less than a certain value or a certain limit of R squared, you're not going to take it into account. We didn't use it for this video, but it's there in case anyone want to experiment on this part. Then the function will return all of these values: the slope of the lows, the intercept, then the slope of the highs, the intercept, the R squared values for both segments. And if we don't have this condition, we don't have more than 2 points for the high points and the low points, we're going to return zeros. And this is basically it. This is the function that's going to take the pivots, or it's going to compute the pivots using the previous function and return slopes and intercepts for the current channel. Now we can try it. I took randomly the candle index 75. I took back candles 40 and the window 3. I'm plotting the candles just as we did before. We're adding using the add scatter function to add the position points or the purple pivot points. And now we're adding on top of it the results of collect channel. We're detecting the channel. We're taking the return parameters, and I'm using the slopes and the intercepts for both highs and lows to plot 2 additional lines using add trace, go scatter, the x's, meaning the indexes of the candles I'd like to put within the channel, and the y is obviously equal to the slope times the x plus the intercept for the lows and the highs at the same time. So this part is going to plot 2 segments of lines, the lower part of the channel and the higher part of the channel. A small detail here, not to be tricked into, again, the look ahead bias avoidance. When we use the collect channel function, we're providing candle, the current candles index, the number of back candles, and the window. And the look ahead bias is taken into account within the collect channel function and within the pivot function. But when we are plotting, I'm extending the slopes that we got up to the current candle. So it doesn't mean that we are testing in the future of the candle. It's simply for the sake of plotting the lines and the segments up to the current candle, just to make sure we are detecting visually the breakout. So let's check how the result looks like. And this is what we have. So we took candle 75 in this case. So candle 75 is this one. So we're plotting the segments up to candle 75. And we can see the points involved in the fit of the low pivots. If we are talking about candle 75 minus the window, which is 3, 1, 2, and 3, and this one is excluded, these 2 purple points are not included in the fitting. So these 2 lines were fit using this point, this pivot, and that one, these 3 points, and these are fitted using these 3 points. So we're missing these. But this is for the sake of the correctness of the calculation, and it doesn't seem to be bothering our detection at this point. We can try on a different candle. Let's say slice from 0 up to 100, and we take candle 50 and we plot this. So this is the candle 50 around here, somewhere around here, and we have these channels. Apparently the candle 50 is outside of this channel. So it's not always the best optimized options, and it's not the perfect channel detector. However, you can be more restrictive when the points are very far from the fitting line. The R squared value, which I'm printing right here, for the low part, the low segment, and then the high segment, you might want to add a condition like we're not considering channels. For example, if we have R squared below 0.85 or 0.9, depending on how restrictive or selective you want to be. However, we should know that the more conditions we're going to add, the less signals we're having on the market. In order to have the most out of those signals for this video, I'm not going to add this condition. I just left these as indicators here. Now we can try to detect the breakout of the channel. So I'm defining a new function called isBreakout. It's going to test a current candle using the back candles window parameter again. If the candle minus back candles minus window is below 0, we're returning 0. It's an edge case. Otherwise, we're calling the collect channel function using those 3 parameters. So we need the return values of the collect channel, the slopes and the intercepts of the upper segment and the lower segment also the R values in case needed later on. I'm defining few variables for the previous candle, the index, high, low, and close values, the current candle, its index, high, low, close, and open price. And these are the conditions I'm going to use to detect the breakout of the channel. So if the previous high, meaning the high value of the previous candle, is above the channel segment, remember we're using the low channel segment here. In other words, the previous candle has some of its values inside of the channel, and at the same time it closes below the channel. It breaks out of the channel below the channel, and the current open and close candle both are below the channel. It means we have a breakout and we are forecasting a future downtrend. So we return 1. Else, in the opposite condition, if the previous low is below the highest segment of the channel, so the lowest part of the previous candle is within the channel, the previous candle closes above the channel, and the current candle open and close values are both above the channel, it means we have a breakout and we are looking for a future uptrend, we return 2. In any other case, we're returning 0. We can visualize these breakout points. So I'm defining a new function called breakpoint positions, just as we have used a similar function before for the pivot points. And now we can try our final function. So although I put candles 75, back candles 40, and window 3, we're only taking these 2 parameters, and we're taking a small slice of our data frame. So DFPL is equal to DF, candle minus back candles minus window minus 5, up to candle plus 20. So we're building our data frame all around candle index 75, a bit before and a bit after. Then I'm creating a new column called is breakout for each candle in my new data frame, DFPL. And we're going to fill it with the results of is breakout function for all the candles, taking back candles and window parameters into account for candle in DFPL.index. So we're going through all the rows of DFPL, which is a slice of our data frame. And then to visualize the breakout points or the breakout candles, we're going to use the breakpoint position function on all these rows of the DFPL sliced data frame. We will visualize the breakpoints with the candles. I'm using candlesticks open, high, low, close as the previous examples. We're also plotting the pivot points. We're adding the breakpoints as hexagrams. So these are the stars, color black, and size 8. I'm going to change the name here to breakout just to give them correct naming. And we're going to use the collect channel. It's not needed at this point because it was computed previously. However, I'm using it here just to check the R squared values for the fittings, and in case we want to change the candle here to replot the new segments of the channels related to the whatever candle we're using. And then we add the segments of our channel on the figure, and that's what we get for the current 75 candle. So this is candle 75, the index is 75. This is the channel, and it seems that 75 is detected as an uptrend breakout, which is correct because we have an uptrend following this candle. We can also verify that the lower point, the purple segment, goes through most of the lower points, so we must have a very high R squared value. Let's verify this. So we have 0.99. This is an excellent fit. The upper one is 0.86, so it's a bit more distant from the points. And we can see this. So we have this orange line, and the points are this one, and this one. We can visually see that they are a bit more distant from the fitting line. Again, we have to remember that if we're considering candle 75, the window is 3, so 75 minus 3, we're going to 72, and it's excluded. So these 2 purple points here are not included in the fitting. This is because we are trying to avoid a look-ahead bias, and if we take 3 candles before the 75 candle, we have to take 3 candles after, and it's not permitted because we would be looking in the future and it's data we don't have in reality. We can try for the other stars that we can see. For example, let's say This one is 45. Let's check candle 45 and we can run it. We can see that we have 2 fits, 0.7 and 1 R-squared. This is probably because we have only 2 points in the upper segment of the channel. So we're not going to look at these because we don't have enough data in our data frame. However, it looks like a breakout, looking for a downtrend, and it's correct. We can check this one, candle 59. So again, candle 59 is a retracement after a breakout, and it was detected as a downtrend breakout. We can also check candle 65. And candle 65, we have a parallel channel, almost parallel channel, and we have a breakout in down direction. So the previous candle has the high within the channel, and the closing price is outside of the channel. And the current candle, candle 65, has both the opening and closing price outside of the channel. This was all I had to tell you for this one. Please let me know in the comments if you'd like this to be tested in a full trading strategy, or any other related ideas that might be of interest for our small trading community. Until our next one, trade safe and see you next time.